You must have been living under a rock if you haven't heard about Bitcoin. The legendary coin that started the crypto boom has now evolved into perhaps the biggest currency system after physical cash. Welcome back to Crypto P2P. Before we move on with the video, make sure to like and subscribe for the latest upcoming news from the crypto and financial world. Bitcoin, the original cryptocurrency, is made possible by blockchain technology, a method of generating and tracking digital assets and processing transactions. When Bitcoin is doing well, other cryptocurrencies are likely to be doing well. When Bitcoin is doing poorly, other cryptos are likely also suffering. Let's talk about the historical performance over the last year. The market value of Bitcoin increased significantly over 2021. A single coin that was worth $32,000 at the beginning of the year. By April, that value had doubled. The price would be supported, in the opinion of traders, by a larger acceptance of Bitcoin by businesses and major institutions. The actuality, however, lagged behind the promise. There was still little that could be done with Bitcoin aside from speculative, dangerous trading. Cryptocurrencies fell along with the stock market in late 2021 due to a collapse in highly valued growth stocks. Bitcoin reached a peak in 2021 of roughly $47,300. Bitcoin fell below $20,000 in mid-June and again in July as a result of this risk-off move, since cryptocurrency is still valued as dangerous and a speculative asset. With no indication of a sustained rebound, this is a loss of more than two-thirds of the value Bitcoin attained at its top of $69,000 in November 2021. Because many investors are feeling worried about the economy due to soaring inflation, a wobbly stock market, and rising interest rates, Wall Street temporarily de-risked the market, which contributed to the crypto market meltdown in June. The cryptocurrency market has been closely following the stock market in recent months, which has further entwined it with variables affecting the state of the world economy. Why does the price of Bitcoin vary? The price of Bitcoin depends more on the supply of gas to Germany as it does to any crypto-related news or metric. Experts predict that in the upcoming weeks and months, volatility will certainly increase as a result of the war, inflation, and changing monetary policy in the U.S., all of which have no apparent end in sight. Over the past 6 months, Bitcoin has only briefly risen above $45,000, and it hasn't reached $50,000 since December 25th, 2021. Despite the ups and downs, Bitcoin's price is currently a long way from its most recent record high, which it reached in November when it surpassed $68,000. Bitcoin is still worth more than twice as much as it was just a few years ago, despite the current price decrease. These price variations are nothing new for Bitcoin. The volatility is nothing new, and it's a major factor in why experts advise novice cryptocurrency investors to exercise extreme caution when designating a portion of their portfolio to digital currencies. The value of Bitcoin has increased steadily over time. Just like that of every other cryptocurrency available, it makes sense for Bitcoin investors to be interested in how high the currency will ultimately go. Despite the turbulence and recent price decline, a lot of experts still believe that Bitcoin will eventually surpass the $100,000 threshold, but they have different predictions for when that will happen. Additionally, according to a recent study by Deutsche Bank, roughly 25% of Bitcoin investors predict that in 5 years, the price of the cryptocurrency would exceed $110,000. Future price predictions. After falling from its most recent all-time high in November, the price of Bitcoin was simple to anticipate at $100,000 late last year. The prediction game has become much more difficult since Bitcoin's significant decline. The most ardent cryptocurrency naysayers anticipate that Bitcoin will crash to as low as $10,000 in 2022. However, a more reasonable position could be to believe that Bitcoin can still rise to $100,000, as many experts predicted late last year, albeit on a slower timescale. But now that huge firms like Nike and other well-known brands are investigating methods to monetize their products in the virtual metaverse, bullish analysts are reevaluating the cryptocurrency markets as a whole. The popularity of altcoins is growing, which has altered investors' perceptions of Bitcoin as a result of the emergence of metaverse games, worlds, products, and experiences known as the original crypto. Which factors contributes to its price? Which factors contribute to its price? Scarcity. Firstly, only 18 to 19 million Bitcoins are now in use, and production will end when there are 21 million. Industry analysts frequently cite this inherent scarcity as a key factor in the attractiveness of cryptocurrencies. According to other professionals, Bitcoin is valuable because its users value it. Because of this, it could be challenging for typical customers to determine whether Bitcoin and other cryptocurrencies are trustworthy. Only when people seek out something in short supply, even if it wasn't previously available, does the entire theory of supply and demand make sense. Regulation. Secondly, in recent months, federal officials have made it obvious that they are paying attention to cryptocurrency. Industry insiders have recently suggested that hawkish government regulation is one of the main reasons behind Bitcoin's underwhelming pricing. There are many unsolved questions raised by cryptocurrency legislation. A recent infrastructure measure requiring all cryptocurrency exchanges to report their transactions to the IRS was signed by President Joe Biden. Similar to this, Treasury Secretary Janet Yellen recently opined that stablecoins, a sort of cryptocurrency whose value is tied to the US dollar, ought to be governed by the government. Mining cycles. Finally, a cycle known as halving has significant impact on the price of Bitcoin. In essence, halving is a stage in the Bitcoin mining process that causes the reward for mining Bitcoin transactions to be cut in half. It's complex and algorithmic. The rate at which new coins are issued is affected by the halving, which may have an effect on the value of existing Bitcoin holdings. In the past, halving and boom-bust cycles have been associated. After a halving occurrence, some analysts attempt to anticipate these cycles down to the day. Conclusion. In a nutshell, financial planners and other professionals caution against Bitcoin's price changes influence your decision-making based on only emotion, as they would with any investment. Dollar-cost averaging, a financial planning technique, has been demonstrated in studies to help investors who make monthly contributions to passive index funds and ETFs perform better over the long term. Experts advise against investing more than 5% of your whole portfolio in cryptocurrencies and caution against making investments at the expense of emergency funds and paying off high-interest debt. With diversified assets like low-cost index funds, people are more likely to achieve long-term wealth and save for retirement, with cryptocurrency making up a relatively small portion of their portfolio. It's appropriate to wait and observe how events develop before putting your money on the line, as crypto is still new to the majority of individuals. For making crypto price forecasts, we only have data going back around 10 years, and while the value of Bitcoin may rise over the long run, it fluctuates greatly day by day. We hope you enjoyed our informative video. Make sure to comment, like, and subscribe. We'll see you in the next one.